Hi friends, welcome back to the channel. So there's three stories I want to bring your attention to today. One is the federal funds rate / national deficit. Also, the cut in oil production and the ARM IPO. So let's just jump right in, look at the headlines here. So first one, rate hikes curb output for at least a decade. And this is a study by the San Francisco Fed. And read the details, it's really interesting. Monetary policy shocks can slow the pace of economic activity much more persistently than is commonly believed, all other economic factors being equal. And here is some of the detail. For example, in response to a 1% interest rate increase, real gross domestic product would be 5% lower after 12 years than it would otherwise be, the researchers found. So one of the things I was thinking about was, oftentimes the market, and I do this every day, is like looking for, what's a catalyst today? What's a catalyst today? What's a catalyst today? But, sometimes these things move at a glacial pace. And what we do know, though, is that the Fed has been raising rates like crazy. And they're saying, hey, we may not even know until after 12 years. But, this is just the way that it is. You raise rates, it's going to affect things. Something's going to break. And I want you to hear the conversation of two former senators were having. And basically, now they're going to tell you the truth about debt. Now they're going to tell you the truth about spending, but neither are no longer in office. So it's kind of ridiculous how this game is played. Take a look at what they have to say.
Would you be inclined to be proposing more spending if you were the president right now with where we are?
I've been married for 20 years, and my wife and I have been separated for 3. And as you say, most of it is all because of money. Most marriages because of money. So,
well, I think he's in a tough spot, and the public now is starting to realize that we can't afford the interest payments.
North America is too expensive, and I'll explain how it's affecting the North American people.
This was all okay when interest was basically money was free. Now we're paying real money for interest.
Within a week of being paid, all the money's gone, and you still have bills to pay.
And this is going to be a problem going forward. Neither party has any bragging rights on this, and there needs to be fiscal discipline.
Well, they shouldn't get a passing grade. This is a disaster that we're headed towards. We're functioning like a ship of fools, not recognizing what's coming at us. You're talking trillion-dollar deficits for as far as the eye can see. You're talking a debt to GDP ratio, which already exceeds Greece and is totally unsustainable. And there's no effort at all to rein this in. The appropriations fights are really irrelevant to the exercise. They're fighting over small amounts of increases. The real fight, of course, the issue that is driving all of this is entitlement spending. The size of the government has exploded under both Trump and Biden, but more so under Biden. But neither one of them seem to have any concern about the debt. Trump lived with debt, he loved debt, and he used to default on debt. And Biden basically believes in modern monetary theory, which says you can print money for as long as you want, and you don't have to pay the piper for it. Or you certainly don't on your political watch. It's coming later. But the inevitable event here is that somebody's going to wake up around the world and say, hey, these guys can't pay back their debt without devaluing their dollar.
The dollar is facing a revolt. The world knows it as the king of currencies, but the dominance of the dollar is now under threat. More and more countries are looking for alternatives, and China's yuan is emerging as a clear challenger.
And then you get a dollar crisis. And when you get a dollar crisis, the American people are going to feel it right in their pocketbook, and their standard of living is going to drop.
And you can see the headlines here. Saudis, Russia extend their oil supply curbs to a year end. And as is saying, this is like $90 a barrel. First time since November. I wouldn't be shocked if it hits 100 at this point. This is just how the game is played. Russia needs that money to fund their war. Let's keep manipulating those prices as long as we can. Let's get Saudi Arabia on board. And so, yeah, they just cut production. I think it's going to have a real impact on the American consumer, unfortunately, who are already having a tough time. So as you may or may not know, Americans' savings accounts are going down. They're just running now out of cash. The student loan payments have to restart, and the housing costs are still high. So keep a track on the oil thing. I think it's really important. And the question is, are we in a bubble?
I think traders are really surprised, not by necessarily the quantity, but the fact that it has been extended until December. So they expected that Saudi Arabia was going to extend their production cuts 1 million barrels a day, but till December, that's really going to tighten the market to the end of 2023. And that's what really caught traders by surprise and what sent markets soaring to above $91 a barrel for Brent at one point.
Being crude oil above 86, not necessarily what the bears were looking for at this point. This opens up a door for potential gains here and a bigger move up here, maybe to 93, 95.
Yeah, you got to look back. I think the next level, and that's kind of what we're trading near. Go back to the October 22 highs, the November 22 highs. It's like 93.5. That's a big level. And I think that's, as we make 10-month highs, that turns into a one-year high, kind of feeds on itself. What's the stimulus? I have to look back to China. I mean, China doing this really ballistic level of spending.
One way to draw the lines, lines are a judgment, right? Mine, of course, because I drew these, and one can draw them any way one wants, but that's what my eye sees. Let's put in a downtrend line, and what we have here in this second iteration is the first chart combined with a clear move above that downtrend line. It's a reversal formation. We had energy at crude at 140 a barrel, Ukraine invasion. And of course, it drops to almost 65. Here we are at 85. And I think we're going towards 90. And I would just stick with it.
So you can see the headlines here. SoftBank's arm seeks to raise up to $4.87 billion in anticipated IPO.
Huge for the IPO market, but it seems like chiefly this is extremely important for SoftBank if they're holding on to so much.
Right, and the company was bought out by SoftBank for $32 billion, so anything above that amount is sort of money in their pocket. Remember, they tried to sell to NVIDIA a few years ago for $40 billion, so we're still way above those amounts, and it could still continue to rise depending on investor demand. But it does seem like the headlines are a little negative today based on where they're starting the roadshow, but it's pretty common for IPOs to kind of temper expectations at the beginning and then raise it later.
They're looking at 95.5 million shares at $47 to $51 each. We'll see where this ends up being, right? So this is just sort of a baseline. The basic gist, though, why I think this is an important one, is it represents where we are in the bubble / where we are in the money printing. Is there money there? Can you raise money for this kind of stuff? We've had a lot of AI hype, and will this continue the wave, or will this signal the top of the market?
And I think what's been tricky in this economy has been sort of mixed signals. When you look at the labor data, it continues to be extremely strong. But when you look at the macro indicators, the inverted yield curve, and the other statistics you see, they kind of conflict with each other. Our view remains that it's a much more tricky economy to manage, and you need to be a little bit more innovative in managing the risk going into latter half of this year, and particularly next year, where we do see a lot more opportunity.
Because impression in predicting bubbles bursting, and he's really good at that, and he's predicted many bubbles that actually subsequently burst. As a result, he's got a really terrific record as an investor, but now he's spending most of his time investing in climate change and climate tech. He thinks the greatest challenge in the world now is the climate problem we have. So most of his money is in a foundation that goes towards that. But he likes to call bubbles, and he's said maybe artificial intelligence is a mini bubble. But we're now coming out of the tech bubble, and that tech bubble he forecast, and he was not involved in tech, and therefore he did pretty well for his investors. He built GMO many years ago. He's a British citizen initially, but lived in the United States after Harvard Business School, and he built one of the better money management firms in the Boston area, and he's quite well known for his philanthropy, but also for predicting bubbles. And he also says the Fed is almost always wrong in predicting recessions. The Fed is not predicting recession now, but he thinks we will have a recession for sure.
Now, if you look at a few years ago, Rivian signaled essentially the top of the market before, when Rivian was, I think it reached the second most valuable car company in the world. It was like getting way up there, and hadn't produced any cars, which is kind of ridiculous. Now, ARM is a legitimate company. It's different. However, this represents, are we still on the AI wave or not? So I'd love to hear your thoughts on any one of these stories. What do you think about the national debt / deficit spending? What do you think about interest rates keep going up? What do you think about the cut in oil production? And what do you think about the AI bubble / ARM IPO? Please share your thoughts. Thank you for your time, and I'll catch you in the next video.